Welcome back, everybody. Ed Cox, Magnolia on Money, for your weekly market and economic update. So today I wanted to talk about perspective and go back and look at market history and put a little bit bird's eye view on where we are today compared to where we've been and those type of things. So I think it's real important. A lot of times with the news is just feeding a lot of negativity. And I'm not saying that things are great in the market. They're not. We're going through what likely is a recession as we speak. They haven't called it a recession, but anybody that's been to the grocery store or kind of been around, you can feel it. And so whether they coin it as a recession or not, but I really think that we're probably dipping into a recessionary period. It doesn't always mean the markets are going to continue to go down or anything like that, but I think we are. But I did want to put the market into perspective. So I'm going to share my screen again, and hopefully this will help you guys kind of paint a better picture of kind of where we are. So this is what we don't want to see. This is let me get my highlighter here again. So this is year to date. It shows down right at 21%, and that's as of today, and so it's midday on Tuesday. But so we're down 21%. So the next graph, let's kind of see where we are, and this is the S&P 500 that I'm showing here. So the next graph goes back 18 months. So I went back to try to find where were we basically even to where we are now, and this is pretty much it. I mean, if you go back December, January, 18 months ago, this was December of 21 or January of 2022. So we're 18 months out. We're basically even. Okay. So what that means is, from this standpoint, we've pretty much lost the gains we had in the market over the last 18 months. Okay. Now let's go back just a little bit more. Oh, wrong way. So this is your 5-year number. So we go back 5 years. The return there is 54%. So you can see if you go back 5 years, the market, the S&P as a whole, is up right at 55%. Okay. So, and one of the things and I'll do this on the next slide, if you look at where we kind of were, I took the graph way back. If you kind of drew a line up through here, this is more realistic as to where the market really should be. Even right before COVID, you can see the COVID drop, and then we just went up in this just enormous growth, due to, once again, a lot of money being put into the economy, which did its job getting us out of COVID, but then we kept adding more to that and really exacerbated that issue. So, markets, they're basically taking back what probably wasn't supposed to be ours anyway in growth. And so, markets are always going to equal things out over the long period of time. But if you kind of take a string and string it out through here, we're not far off from probably where we really should be anyway. So I think, looking at the market from a perspective of long-term, which is what we all should do with our long-term money, long-term investments, is, we really need to look at those through the lens of long-term. So I hope that helped kind of put a lot of this into perspective with all the news and stuff we hear. But it really, I think it really helps. It helps me to go back and, remind myself, okay, here's where we are. Yeah, we really probably should be down kind of where we are once we, string that line down, over time. And so, things are going to start, slowly and slowly getting better, hopefully pretty soon. And we'll come out of this like we do all the others, and we'll be stronger for it. Hope this helped. God bless y'all. Have a great week. We'll talk to you soon. Bye-bye.